Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Lodgify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.
Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
Good morning.
Good morning, people. How we doing? Happy Monday.
Will has had his well and good morning coffee today, so expect a lot of energy. This is good.
It's like Groundhog Day when he sees his shadow. You know, it's like we're gonna have more spring. We have not. So, yes. Good morning, Michael. How we doing? Good to see you, buddy. Miss you.
Yeah, thank you. Yeah, we had a good weekend here. Beautiful weather. Planted the garden. Got some tomatoes. Lots of different fruits, some herbs. So
let's go.
Spring is sprung. No snow
here.
Got
Brandy in a new location. So
yes,
he's always
I'm in Vero Beach, northern Florida. We had a big family vacation, like 13 of us here for the weekend. So new location, but heading back to New Orleans like immediately after the show.
We can't go over.
Yeah, seriously, we have to keep our 30-minute window closed. Yes, fun times. I had a good weekend celebrating our friends Stephanie and Hunter, who got engaged on Thursday. So fun little engagement party at our house at the Rave Ranch, as we call it. So always a good time. It was always a good time. Yeah, nothing crazy. It was like 89 degrees Saturday, 70 degrees yesterday. Now we got some snow and some rain last night. So, changing it up, keeping us on our toes.
Or meteorologists in Denver. Just how do you do it?
I know. Seriously.
Do you need bathing suits or ski goggles or both?
Both, because that sounds like a great time.
Winter tires.
100%. I love it. Well, hey, let's begin with some fun stories, because we all remember the fun little billboard news stories we saw with Airbnb and Vrbo. So Vrbo putting a billboard up saying, hey, we're professional, we have whole homes, you should think of us as like a cooler cousin to Airbnb, basically. And this other billboard came up through a previous guest, the CEO of Savvy, which, if anyone remembers the episode that came out in VRMA 2 years ago, Brandy? Did we do it 2 years ago?
Oh man, yeah. Don't quote me on times.
I think it was 2 years ago, but we formerly known as B&B Finder put up a billboard basically saying, hey, you should think of us as Airbnb and Vrbo's hotter, cooler, smarter, and younger sibling that never has fees. So we have a fun little billboard war that is getting digital attention, which Michael brought up and thought was interesting. So fun times.
You pay $700 for a billboard, and then you get a lot of press out of it. That's the ideal spend in the marketing person's world. So, make analog news digital.
Yeah,
100%.
And have fun with it. Like this is, obviously we're talking about it. It's a good, if you provide some humor, it kind of gets people's attention in a positive way.
I'm trying to think of the next billboard I could do for myself. I'm like, all right, how do I use this strategy? How do we get some HFM publicity, So it's always fun to watch. I think it keeps it interesting. And like you said, Brandy, it gets people talking. So shout out to Savvy for seeing the opportunity and seizing it, because it's a small window in the marketing world. All right, Brandy, you saw this one, brought this to our attention in the group chat. Do you want to take it away?
Yeah. So we have a congratulations to Sweet Op. Simon and his team have raised $3 million to support their products and add some more AI technology to the industry. So it's been kind of a dry, quiet couple months in terms of investing, except for all the Vacasa drama. So it's just great to see, someone else in the space still having success fundraising. So good luck to Simon and his team.
I mean, yeah, you add AI into your business name, and automatically you get funding. Turns out that's a great strategy. And they started out as an operator and built their own tech, right?
Yeah, so sweet. So exactly. And normally I'm really against that strategy when operators try to go and build their own tech. But occasionally you do have people who are successful doing it. So there's always someone who can break that mold. But I would still highly recommend being cautious. If you're just a regular operator and you don't have the tech background and you're not solving for a real problem, have some caution going into that.
Yeah. A lot of times the best tech is solved by filling in gaps of what's out there in the industry. But, we'll touch on it a little bit later in the show. If you're building it for yourself to keep yourself, it's a fool's errand, particularly in short-term rental space, because the scale, even the largest companies like Vacasa, have built so much of their own proprietary tech, tried to get a multiple within the SaaS world, like they're and turns out they're not a tech business. I don't know who could have predicted that, anybody in the space, but it's good when people build it and then spin it out and it becomes a product, not just for your own self.
Yeah, I actually remember this was many years ago, maybe like 2016, 2017. And I was at a small conference. There were round tables, and the person that was moderating our table was someone from Vacasa. And I was saying how we were struggling with our accounting because at the time I was doing all of it. And he was like, well, my one piece of advice is do not build your own accounting software. And I was like, and he started going off into all of that. And I was like, okay, he was the adult in the room at the time. So QuickBooks was sufficient for a while.
It's one thing to think you're going to build your own PMS or something, or you have your own pricing strategy. When I was at NoiseAware, I think we had 3 different customers, all of reasonable scale, that says, oh, we'll just build our own noise monitor. Why on earth would you build your own noise monitor? Hardware, first of all, sucks. Hardware is brutal. Yeah. And then it's such a point solution. Go focus your time and energy and money somewhere else. And by the way, all 3 of them failed. They spent
literally almost any other point of the business would probably benefit from that money more than
don't touch hardware
and time. Yeah.
Yeah. I'm gonna go build my own lock system. No.
Oh my God.
No. Sounds miserable. Yeah. Creating I've learned that through with us on the show with having a physical product with the coffee. It's okay, this is a whole another business, even though it's a simple physical product. Creating anything that's outside of the service that you offer, which is for this scenario, property management services, right? So to go to that and then be like, I'm going to be a tech company today and learn how to build hardware. It just, doesn't make sense.
Let's jump into a conference discussion last week at the Short Stay Summit where Steve Schwab, Graham Donahue, and Vered were from Guesty. We're chatting about kind of private equity and big dollars in short-term rental space. And to Steve Schwab's credit, calling out the obvious, it's having a SaaS multiple on a service business is untenable. And a lot of, I guess, VCs and private equity companies got duped in the run-up of funding short-term rental industry businesses.
I take issue with duped. These are sophisticated financial investors, and sometimes they just want to do some more due diligence. It would be maybe my comment to that.
Yeah, I mean, you can hit all the growth numbers, particularly the way they were doing. Sonder overpaying for them, and Vacasa literally 100% inorganic acquisition play, not much of their own homeowner retention play, but playing in a tech multiple into it, these things always come up to bite you in the end. And actually, Graham had a comment that his private equity funds behind them think that right now is just a great time to go out and buy companies because There's not a whole lot of money flowing into the space in terms of investment, but the environment that they're finding is a very tough one. It's just not somewhere that you can step in and buy lots of businesses. And I think a lot of that is because VCs gave valuations that are so high that founders, unless they get to a number close to that, they literally just can't sell. So they'll either drive it down to zero or, figure something out and take off. But we've talked on the show a lot about what we think will happen in the space with acquisitions. And sounds like Graham has been out there shopping and had no success on acquisition. So let's see what the future holds. I still have to believe there's businesses out there that can be acquired. It's just a matter of, are they accretive to the companies that are actually buying? And is it at a price that makes any logical sense?
Yeah, I still think there's plenty of time left in the year for things to move a bit. Maybe people haven't been, they're not at a point where their financials are forcing them into selling.
Will? Yeah, do you think I got nothing really to say. It's the same story, different month type situation where it's like, look, there's a ton of, I would say this probably goes to both camps where VCs and private equity funds or firms are sitting on a bunch of dry powder. But when it comes to the acquisition point, anyone that's received investment in the last 3 years probably overinflated their valuation. Now they have to focus on true numbers and true profitability to be sustainable, which it takes a while. It's not an overnight thing, as we've heard a lot of people on this show or other shows inside of the network that it's tough out there right now financially. And so I think it just is kind of the same story. And also, in my opinion, private equity is not, in my opinion, just not an ideal outcome, because I think they suck soul out of companies, and companies, when they get acquired by private equity, most likely or not, just end up being worse than before. The team is miserable. A lot of the founders or early employees are gone, so then it kind of loses its culture and all the other fun stuff. So that's just my opinion. So I'm sure there's probably a lot of people trying to hold out and not sell to private equity, especially in this space. We saw a lot of that in the tech side. Now they're becoming the worst companies to work with. So that's my opinion. That's my statement. If anyone listening is offended by that, this is an opinion-based show.
I think that you have probably some people that agree with you, especially in our industry. But there was such a sudden shift, and it wasn't just in our industry, but it was for a very long time. If you were going after VC money, it was growth at all costs. Profitability is irrelevant, which I think is crazy. But and then in all of a sudden there was a switch, and it was now you actually have to be profitable and have good financials or have the path to profitability. And that switch happens relatively overnight, and you've now and I will place some of this, I won't say blame, but the curators of this trend were all these VC firms that were flooding our industry and many others with a lot of money. And there was a certain playbook that you had to follow in order to secure the funds. And then all of a sudden, to change the playbook, it's well, you're the ones that said that this is how we should be growing in the first place. And trying to get so it is, it took a long time to get to this point, and then there was a shift, and it'll probably take a long time to correct, as well.
I think the shift in the long run is a great shift for
Agreed.
Businesses and founders and all of that, focusing on revenue and profitability. Focusing on growth is how you maximize your returns and whatnot as a VC. But if you don't have the underlying metrics of even a path to profitability, then you go public at a $4 billion valuation and you unravel and get sold for $120 billion. So I'm not thinking of any company in particular here, but things can unravel in certain ways pretty quickly. What I do think could be a path, and I know you're against private equity, Will, and I totally understand the fact that they gut companies out. But what we saw Altito do 5 years ago or however long it was actually making their company significantly larger and attractive to private equity funds by merging, essentially. And while a very complex deal was made between, I think, 5 companies at the time, it ended up working out spectacularly. And then they were at a scale that's large enough to be acquired. They were profitable. All of the business lines themselves were profitable, which was, tough to do. And the big caveat was, and someone can correct me if I'm wrong, but I don't think any of them had ever raised money. So the ability to merge, have a 5-person board, the former executives of each of the individual businesses, that kind of stuff makes total sense. And then you become a larger acquisition target. And then you've got others that start as a private equity firm, see the industry, and say, "Hey, I think I can do a roll up." And Greater Sun Ventures is one of them. I forget their other brand that they're flying the flag under, but there are some private equity funds that are poking around. But to Graham's point, I think it's just hard. Anyone that's large has taken a pretty good chunk of venture funding, and then the valuations, and then trying to meld all that together under one roof. It's a complex problem for people smarter than me.
I was going to say, even having conversations with operators around here in Colorado, I'm starting to see a lot more of this co-opetition type play where everyone's like, hey, yeah, we may be competitors in the same market, but if we kind of maybe even thought about merging, there's a lot of deal talking happening right now, at least with some bigger operators in the space out here just in this one state. So I think the Altito play is a great example, Michael, especially with me not being so pro PE. It sounds like a successful way. So if that is a leading path where it's profitability first, not raising cash, merging, getting bigger, getting scale, while keeping profitability, and then going that route, then yeah, sure, it sounds like a good opportunity for everyone to make money. And it sounds like a great opportunity for founders and executives that were early on into these companies to get into a board position and not have to be in the day-to-day, which is always a grind. So I don't know. I think that's a different outcome. That's the one successful scenario, but I hope that maybe plays out here more. I'm hoping we see more roll-ups or more mergers of brands saying, hey, instead of being competitors, why don't we just look at our strengths and weaknesses in this market that we own and dominate and see how we can become the bigger player and hopefully attract either a more profitable business in the future with multiple teams or multiple businesses merging, or we just get bought out by a good company at the end. So TBD. I hope that's a successful playbook.
Brandy?
Yeah, no, nothing really. I mean, I think we still have a little bit more of the year. We keep having these kind of inflection points. It's been almost like every month where we're making more predictions as to what's going to continue happening in the year. So I still, as I said before, will be interested when we do our wrap up, how many of these things come to pass. But we've been saying this for a long time, that the continued consolidation in the industry is really the only way forward. And we still, pending all of the Vacasa, Costco, drama, we still haven't seen a very successful large operator operate consistently at that scale. So on the tech side, it makes a lot of sense, and rolling up, combining all of that. But I think to Will's point, it's interesting if you have these geographically connected operators that are trying to do their own versions of that, and maybe our industry is something that only scales to a certain size. So I think we're still a little bit too early in the process to tell.
I was fact-checked on a comment you just made by a former Vacasa employee that no one at scale has ever succeeded in this. And I'm sure this was public, maybe it wasn't. But Wyndham at the time was profitable. So Wyndham had succeeded in doing it at scale. And I would attribute a lot of that to the fact that they managed so many resort buildings, complexes.
Yeah,
and
it's much easier to do that than when you have all of those same number of units spread out everywhere.
100%.
Yeah, you drive down Destin or Panama City and you see these 200 apartment towers, but it's Wyndham managed. Resort Quest, Wyndham, whatever brand they were flying. And so in those cases, that certainly could add to the bottom line quickly. Lots of units and density in a single building, even not just a single market. So, it can be done, but what did it take? A household brand, a name that people knew and recognized. So I'm still hopeful and optimistic that, short-term rentals can be a household brand outside of the OTAs. I think at this point, Costigo is our best bet of something happening there, but there's still drama going on over there. So let's stay tuned.
Yeah.
The chronicles continue. But yeah, I would say, a very light news week. I don't think there's really much else that we were finding very attractive in terms of topics for the week. So is there anything else you guys want to cover, or do we just call it early?
Well, I think that we, one of the things is just continuing, and I'd love to hear from listeners of the show, kind of how they're, what they're experiencing, because there's a lot of, travel demand is changing. So there's one thing what you see in like a news headline or what's being reported, but it'd be great to hear from some of the listeners of like what they're seeing in terms of trends. One thing we're seeing is like a much shorter booking window. So yeah, in the next like couple weeks, it'd be great to hear from some people about what they're seeing in their own individual markets. And because everything in this country is so market specific, you could have Miami having something completely different than what's happening in the Panhandle, and that's in the same state. So
100%.
A little sentiment. Maybe we do a poll on LinkedIn, Will. Are you feeling good about this year or bad?
For sure. And if anyone has comments they want to send into the show, you could actually go to your email and go type in goodmorning@hospitality.fm. We have a dedicated email for this show where people send in tips, news, and of course, their opinions, because again, we are an opinion-based show. So would love to know your thoughts and what you're reading and hearing and seeing. Travel demand is weird. I'm excited for, I don't know. I have a little bit of hope for this year. I have a feeling it's not going to be all doom and gloom. But again, I think Brandy has made the comment and sentiment pretty clear. Like the prediction kind of changes every month, and we're going to have a fun wrap up at the end of the year. So it's going to be interesting to see how this year played out.
And layering on that, I think it's going to be market specific. If you rely heavily on inbound or outbound, transatlantic tourism, it's not going to be good. The Canadians seem pretty upset with America as well. So if you rely on Canadians, probably not going to be good. But if you're a drive-to market from a major U.S. city, I think it's going to be great. Travel's still going to happen. It just changes where.
Terry just commented, hurricane recovery is not fun, which, yes. And it does seem, as someone who grew up in the Northeast, just like not with hurricanes at all, it seems that by the time you like recover from a hurricane season, you're already in the next one. It is. I was very used to snowstorms, and that just melts and usually doesn't cause too much damage in comparison. But yeah, it's hopefully a quiet season this year.
Yes. Well, in other news, to help wrap the show up a little bit, we have a little anniversary to celebrate today, and it's not exactly today. We're pretty dang close. We're 2 days away. So we want to give our amazing European crew, Leah Walton and Sarah Nandapri, a big shout out for hitting their 1 year anniversary on Good Morning Hospitality as the co-host of GMH Europe. They've been crushing it, and I can't believe it's been a year. Honestly, I feel like it's still a new show. I'm like, all right, but no, they handle it every week perfectly. They got to MC the Short Stay Summit in London, which was a big deal, and especially for the dynamic duo that they are. Just to see Sarah and Leo just vibe the way they are, they're the perfect duo. So I couldn't be more happy with how this segment of GMH has turned out. And yeah, another year. Can't believe it. It's insane.
I know. That is pretty crazy.
Yeah. October, the show will be 5 years old. So it's like, okay, the time has flown, but it also feels like it's been way longer.
For it.
Yeah. We're here for it. Good times. And then, of course, for all the listeners who may not get to catch the live, we also want to make sure that you are getting the good old hospitality news delivered right to your inbox every other week. I was corrected by my marketing team at HFM saying that the newsletter doesn't go out every week. It goes out every other week. So this Wednesday, we have our newsletter coming out. So if you go to the link in the show notes, you can subscribe, make sure that you're not missing a story from hotels to European news to short-term rentals to even other travel sectors like airlines and cruises that gets covered by Sarah and Steve Turk. So Sarah Dandashy and Steve Turk, sorry, they're not a married couple, so separate last names there. But it's always good to get that in your inbox. So go subscribe, make it easy for you. We promise we won't bombard you with crazy emails. We just want to get the news out there. So I got some exciting announcements to announce next week on the show. Been working on some cool projects, but want to know what you guys are working on. Anything fun, anything new, anything you guys are looking forward to, or are we in the same old boat over here?
Well, I'm back to New Orleans, so it's like the current same old for me. But yeah, there will be a different background next Monday.
Brandy and her backgrounds.
It'll be the same background for me. So, you know what to expect from me.
Consistency.
Yeah. Michael, the most consistent host on the show.
1% improvement every day. That's all.
Yeah.
Amen. Well, all right. Thank you to all of our morning people who tune in, who make sure to be on the live. We see you, Paul. We see you, Terry White. So thank you guys for commenting in. If you like the show, give it a good rating on your favorite podcast platform. Go ahead and sign up for the newsletter. Check out our other segments each and every week. And like always, we'll see you guys all again next Monday.
Want to stop juggling spreadsheets, calendars, and a dozen apps just to run your rentals? Logify makes it easy. It's an all-in-one toolkit for hosts. Build a direct booking website, automate guest messaging, and keep all your channels in sync. Running your rental business your way has never been simpler. And for Good Morning Hospitality listeners, you can get 20% off any yearly plan with code GMH20. Just check the link in the show notes to get started today.